fear report that has come in from Jefferies, while we also have a Morgan Stanley India strategy note. Now, first, let me take you through the greed and fear note that's come in from Jefferies. They're saying that if China trade remains the current focus in Asia, then dedicated emerging market foreign investors may no longer be overweight on India. That's a very, very big thing coming in there. But other than that, private banks and IT sectors owned by foreign investors have underperformed in the recent past, and greed and fear has never tended to own IT services companies. But have always owned the private sector banks. So yes, that's the word coming in on greed and fear. Furthermore, they are also saying that what they expect is for value-oriented investors, they are approaching a level of valuation which the markets, which makes them finally appear interesting. Modi has made more positive differences to the ordinary people's lives in the 10 years, and he's been in a power than any other leader of a government in the world today. And that's the word that's coming in from the greed and fear report. The bigger risk for greed and fear is whether there are any changes in the capital gain tax. That's something that is looming over them, and that is what they're concerned about. But yes, let's move on to the India strategy note from Morgan Stanley, where they believe that what question they're asking is that will Indian equities derate, and a lot of foreign investors are waiting for Indian multiples to decline before increasing their participation in the Indian markets. Aside from a negative surprise out of the June elections, what Morgan Stanley highlights is that they see no other triggers for a derating in the near term. So they're not worried about that, unless depending on what is the election result. What they're highlighting is that in India's upward growth cycle, they see a potential to produce strong earnings for the next 5 years. So earnings will be something that will be there. And in the long term, adverse developments in demographics, debt, democratic institution and geopolitical tensions is something that could lead to a derating in the stock. Near term only concern is going to be that election results and their impact on the policies. That is something that they're watching out for. But that's what the strategy note is highlighting, both from Morgan Stanley as well as greed and fear. Morgan Stanley's main concern is, what is going to be the future after June 4th, in how that will be moving in the near term, while Jefferies' Chris Wood is highlighting only in concerns of China and how that is developing and how FIIs are actually seeing that.
Well, absolutely. And let's get a move on then. IT major HCL Tech will be acquiring certain assets of HP and...
If you like this video, then like, share and subscribe to ET Now.